The economic implosion has started. You see it all around you in the economy, whether it's the rising unemployment rate or the record levels of delinquencies and auto loans. Plus, it's all being manifested in the price of gold as the dollar declines and fades away into oblivion more and more each day. It's all being reflected in the price of gold. This channel is about you thriving through this economic implosion that's clearly happening in front of all of us. You got to avoid the landmines and capture some of the massive gains that are available. People complain that precious metals prices are being held down by manipulation. I say great. That's why you're able to buy precious metals at the ridiculously undervalued prices that they're at right now. And the mainstream media hardly ever talks about gold. Even the big financial channels, they don't even mention it. Maybe your friends are calling gold a barbaric relic and it just sits there and gathers dust. All of that is great. Everybody complains about it and laments about it like, I can't believe people think that way. Meanwhile, you're sitting there looking at price of silver is only at 41.50. You could scoop it up today for a ridiculously low price. And gold, of course, too, has had a great run because it's starting to wake up. This isn't the end of the run. This is the beginning of the next phase of the run. So while everyone is looking the wrong way in terms of investing, and they're not looking at gold, which is starting to change now because of the unignorable strength of the recent gold price rises, the increases in gold has outdone almost everything except for silver. And of course, by extension, the miners have done even better than gold has done. Gold's gone up a ton, miners have gone up a ton plus. It's also a great way to insure yourself against all the stuff that's going on in the economy, which is record delinquencies in auto loans. People are living off their credit cards to buy groceries. We have more debt than ever. In every strata, that debt can be accumulated federally, the company you work for, your neighbor, everybody. And now we're having another government shutdown coming up, which every time, what do I tell you? It'll happen again and again and again because they've never once ever fixed the actual problem. Fiscal responsibility is a way out of a debt ceiling debate, way out of a government shutdown. But in 100 years, no one's had the political will to do what's necessary to get this fiscal house in order. Rather, we're just going to drive the economy off the edge of a cliff. And we're all watching it, and we're all now agreeing that it's widely known that the debt loads that America has will never be paid. And people say, yeah, but you could just print more money. Yes, that's a way to pay it by defaulting through inflation. So we either hard default, we just don't pay what we owe, or we do a soft default where we pay some of what we owe but not all of it, or there's a default through inflation. These are the choices. And there's one more choice we'll talk about, which may or may not happen, is the revaluation of gold, which is a devaluation of the US dollar. That's something that might happen, but we'll get into that in this video. And we've got weak employment numbers. There's not a lot of job openings. There's not a lot of intention to hire. And the unemployment rate is starting to tick higher. Even though the participation rate has been declining, the unemployment rate is still rising. And this isn't a destination. This is a trend. It's been going this way for a while. And now this is when it really is going to start heating up. In terms of employment, it's really going to start heating up. And we're going to go towards double digit, even from the ways that the government calculates unemployment, which is absolutely several percentages too low, lower than the reality of things. And with the revisions of prior financial data that came in pretty good, they're just saying, okay, well, it didn't really come in good. We just told you it did. But the reality, when we look back and revise the numbers, is now, for example, in June, the revisions put it the lowest level of employment since the pandemic. But we mentioned earlier about how the mainstream media, like CNBC, for example, they never talk about gold. And that's why there is absolutely no retail buying. Very few people that you know actually own gold or even own gold mining stocks. It's not like in China where they realize the value of it as their economy is having troubles. We have the economy having troubles, but no one's recognizing it yet. You've been told for so long, indoctrinated, that the American economy is so strong, is the envy of the world. And it has nothing to do with whether or not the economy is strong. That's just what they told you. And I get why you would believe that. But listen to this article when I go through it from CNBC. It really puts in perspective the ways that you've been indoctrinated and the reasons why the people who wrote this article, plus maybe you, have missed out on this incredibly clearly obvious gold trade that is making a lot of people pretty happy. Gold is on a record run. Here's how to invest according to experts. What experts? Like, these are the people that didn't even see the gold trade coming this whole way, and now that it's happened, they're telling you, here's how to invest in, here's how to trade it. And listen to what they say. Here's the experts telling you what to do. And remember what I did. If you remember way back when I was on that ill-advised cruise and I was filming videos from there, and I told you 85% of my investments went into gold and silver mining related investments. Physical gold and the best miners. Not all of them. A lot of them go bankrupt. The best miners, and I did that a long time ago. So keep that in mind when I go through this article and think about what they're saying in terms of what I did and how it worked out for me. Interest in physical gold and gold-related financial investments has soared amid the precious metals' recent rally. It's important to get into a trade like this before everybody else is talking about it, before the rally. That's what we did. And now there's a rally. So now the news is talking about it. People are talking about it, but they don't know what they're talking about. Their so-called experts don't understand how to make money from investing in gold. Here's what to know before piling into the precious metal. Gold prices had another fresh record this week as investors piled into the metal amid economic uncertainty and rising bets for a Federal Reserve rate cut, both of which you knew was coming up. So that's why you position ahead of time. I know people who are reading articles like this come to you and buy the shares that you already own, driving them even higher. So far this year, gold has gained about 35%. Spot gold is now near $3,600 an ounce. Here's a chart of gold, which is one of the most beautiful charts I've seen. Investors regard gold as protective against bad economic times, according to the Federal Reserve Bank of Chicago. Oh, thank you. As a safe haven investment, gold tends to perform well in low interest rate environments and during periods of political and financial uncertainty. According to Wells Fargo Investment Institute's latest investment strategy report, its analysts expect ongoing gold purchases by global central banks and heightened geopolitical strife to support demand growth for precious metals. Yes, but it's not valuable to know that now. It was valuable to know it when I told you about it, because then you could have made a ton of money from listening to me. These are all the people coming late to the game. In times of acute stress, gold stocks underperform, so to the extent that people want exposure, a gold bullion-backed ETF does a better job than gold-related equities and gold miner stocks, said Samana. No, that's categorically and demonstrably provably false. Talk about absolutely doesn't know what she's talking about. Anyone who's been a subscriber to my newsletter knows exactly how well gold stocks performed. And they've been some of the best performing assets of any asset type, whether real estate, cryptocurrencies, whatever you want to look at. Magnificent Seven, everything. The only thing that outperformed gold and gold mining stocks has been silver. And she goes on to say gold mining stocks are not as closely linked to the underlying price of gold and are more tied to business fundamentals. The price of gold is a fundamental for a gold mining company. Whatever you're pulling out of the ground that you're selling, the cost of that, the value of that, is one of the fundamentals that goes into all the fundamental analysis that we do, which Leeds analysis is 80% fundamental. The price of gold is the most important fundamental of any gold mining company, which is 100% the opposite of what they told you. And this is an article on CNBC, and these are so-called professional investors that are completely wrong, and everything that anybody who's been following me has seen over this time, you know this article is absolutely backwards. And again, this is good. Let people misunderstand the real value of the thing you're buying. You don't want everybody to know about it yet. They're all finding out about it now because the performance has been so good, and now people are starting to notice it and talk about it. Now, here's the part of the article I really wanted to tell you about because it blew my mind, and you might laugh. I laughed. Despite gold's record run, financial advisors generally recommend limiting gold exposure to less than 3% of one's overall portfolio. Well, I'm more at like 80%, and it's working out pretty well. And I'm not giving you personalized advice. It's really dangerous the way I invest, and it's not appropriate for everyone. I have really high risk tolerance. I'm wrong 100% of the time. Do what's best for you. But for them to say that keep 3% in gold is ridiculous. Maybe physical gold, but you have to have a lot of gold mining stocks right now. And if you don't, you're going to be on the wrong side of this trade. CNBC Financial Advisor Council member Duquesne says she had no gold in the portfolios she manages for her clients, in part because of the temperamental nature of any trendy investment. Trendy investment. Gold is the absolute opposite of trendy investment. It's been around for 6,000 years. That's not trendy. That's the absolute opposite of trendy. It's been here since before trends existed. And she's calling it trendy because she missed out on the boat. All these people who didn't get out on the gold trade didn't even see it coming. And wait till you hear the next article I want to say. Didn't even see it coming. And now they're like, okay, own 3% and it's a trendy investment and this and that. They say all the reasons why it's okay that they missed out on the most glaringly obvious stock market trade and setup. And that's exactly what I told you in many videos over the years now. And you remember, I've been doing this for almost 3 decades, exactly this. Are we in the 3rd inning of this rally or the 9th inning? Gold is priced as a commodity, and that can make it hard to pinpoint the fundamentals, she said. I would suggest that because it trades as a commodity, that's what makes it so much more clear and straightforward to pinpoint the fundamentals that are driving it. If there's something that has the same value in Siberia as it does in Denmark, as it does in Russia, as it does in Chile, that is a commodity that can be easily understood from the fundamental perspective. Everything in this article is 100% backwards and wrong, and it's steering you in the wrong direction, and it's completely irresponsible to have put this together. And this is what everybody else is watching too. So when you're wondering why you're making a ton of money on gold stocks, and you look at your neighbor and they're not even in gold, it's because they're reading articles like this. They're watching the wrong things. They're watching the things that they think are the professionals telling them how to invest and what to do. They don't know. Clearly, the guests from that article don't know what they're talking about. That's why they even say that their wealth management clients don't even own any gold or gold mining stocks. Wow. So then why are you doing an article about gold mining when you're not even involved in this absolutely clear trade? But you see how it's so important to always be looking upstream? Look at this article that people are reading now. They're getting up and saying, I'm going to start taking my finances in order. I'm going to make some right moves. And they sit down, they read the CNBC article, and they're reading that. And like, okay, I'll put 3% of my portfolio into gold. All of that is you've already lost.